Hey folks, Dan Frio here, the rate update. Today is September 23rd, 2020. What did rates do today? Don't go away. You'll find out here in a minute. Stay tuned. Okay, so I'm changing up the channel a little bit. Everybody's requesting, they're like, Dan, you do the rate update every day. And in your title, you're like, what's today's 30-year rate? So I'm changing the format. I get it. I adapt with the times. So here's what I started doing. I started this years ago, and I would post videos because there was so much discrepancy on the internet that I'm like, you know what? There's so many people getting duped right now. I got to come out with some facts. I got nothing to hide. I've been doing this for 32 years. My address is all over the place. You can Google me, find me kind of anywhere. I've been doing this forever, so I'm not here to make a quick buck and move on and to kind of hose you over. That being said, I want to go over, and just to let you know, I'm going to go over rates on a daily basis. Rates vary though. There's so many pieces of the puzzle when it comes to interest rates. There is no one rate out there for like a 30-year fixed rate. So if you say, you ask somebody, what's the 30-year fixed rate today? And they say, oh, it's 2.99. Steering clear, because what they should be doing is asking you, what do you got? It's not that I'm trying to divert the question or not answer your question, but I want to give you the facts. So what's your credit score? 740, 780, 620. Well, 740 credit score has a better rate than a 620. Is it an investment property or is it your primary home? Better rate if it's your primary home. Are you looking to pull out cash? Are you looking to just refinance your term and get a lower rate? It's called rate and term. Better rate. So there's so many pieces involved when it comes to mortgage rates. I want to make that clear. So when I go over a lot of this stuff, I got to be generic because it's basically impossible to go through every scenario that there is. But I'm going to go over kind of some baselines, and then from there, there's probably a little bit of an uptick or down trend in that rate depending on certain things such as your credit score, how much the loan amount is. Believe it or not, rates are better on loans over 100,000. They're better on convention or if it's your primary home. They're better if it's a single family home versus a condo. There's all kind of pieces of the puzzle. So let's get to it. So what I want to go over today is this. Here's what I'm going to start showing you on a daily basis. This is the trend of what's going on in the market. And it gives us where we were today, 7 days ago, and where we were like a week ago. Okay? So let's go through this number right here so I can make it make sense to you. And then I'm going to go over where my rates are today and what the markets did. So right here, this is saying the 10-year Treasury. We're not going to look at that right now. We're going to look at the 30-year conforming loan. All right, the rate says 2.93. Again, take it with a grain of salt. That's the average. So there's going to be rates higher than that. There's going to be rates lower than that. So that's where the benchmark is. It hasn't changed since yesterday. It's gone down 0.1 in the last week, and it's gone down 0.75. I think this number is inaccurate because it's basically looking at, this should be reading 2019. So where we were back in February 18th of 2019, we're 75 basis points lower today than we were back then. 75 basis points is 0.74, or I'm sorry, 74 basis points is 0.74 lower on your rate. So let's say, for example, the rate was 3.75. I'm going to round this number up. That means today you have 3.75. That means today you could probably get 3 if everything is equal. All right. So there's really no changes with the 30-year conforming rates today. And I'm going to validate that on my data here in a second. But let's go over what happened today with mortgage-backed securities. Dan, what is a mortgage-backed security that you always talk about? Well, I'm going to bore some of you people out there that watch me on a daily basis. But those newbies out there, you're going to hopefully get it. All right. So this number right here, we watch this number right here. So I'm going to say one thing basically is green is good and red is bad. What green means is the price of this mortgage-backed security is going up, thus driving down the rate, the interest rate, your mortgage rate. Okay, so this has an inverse relationship on what's going on with mortgage rates. So what is an MBS? Okay, it's called a mortgage-backed security. It's a bond that sells on Wall Street that is loaded with mortgages, and it determines that the trading of these bonds determine where mortgage rates are. Okay, so the higher the price that is paid for that bond, the lower the yield. So here's how it works in its easiest form. Let's say the bond that you're looking to buy has $100 face value. So in a year from now, you're going to get $100 back. Okay? Well, today it cost you $50 to buy that bond. Okay? So you put in $50. In a year from now, you're going to get $100 back. That is a 100% return because you doubled your money. So that is a 100% rate of return or interest rate. Okay? So now, like I said, let's drive up that price. So let's make it simple. I now pay $100 for that $100 bond. So I pay you $100 today. A year from now, you gave me that $100 back. What was my rate of return? 0. You just got your money back. So see how the increase of the price drives down our returns. So that's basically what we're watching, and that's why we love when this number is going up. So let's see what happened today. It was up 3, not enough to move the markets. And again, that is validated through this right here. 2.93 is where we were today. 2.93 is where we were yesterday. There is no delta is difference. So there is no difference from yesterday, and we're 0.1 lower than we were last week. So the 0.3 really made no difference. Okay, so here is what I follow on this channel, and I do this on your behalf, so we can basically hopefully peg in the lowest rate you're ever going to qualify for or get during your duration of your mortgage process. So you can see there's been some nice uptrends in the market. Well, there's also been some downtrends. Not everything that goes, it's not going to continually go up. There's always a down. I always say, pigs get fat, hogs get slaughtered. Don't try to time this market. It's like stock market. You're never going to buy at the ultimate low and sell at the ultimate high. It's just basically impossible. And if you did that, you'd probably get thrown in jail for insider trading. So we try to follow these trends. I won't say try. I follow these trends to hopefully give me a guide on what's going to happen tomorrow, next week, in down the road. These levels right here, you're going to see a bunch of lines. Let's go through what these lines are. There's a line here, there's a line here, there's a line here. All these just lines that go straight across. These are what's called Fibonacci levels. They give us long-term and short-term trends or trading barriers. So the long-term trends are right here. So what I mean by that is this price of these bonds is going to fluctuate long-term within this range, okay? Then you have short terms. This is a short-term and short-term. So you're going to condense it. We're going to kind of look at micro numbers here, and we're going to condense things and seeing where they're trending right now. You can see back from, let's see the date here. Since about August, the middle of August, we really haven't moved. Look at this. I mean, basically, it is flat. And that's what I've been kind of predicting, because what's happening is the Federal Reserve is stepping in, and they're helping, people that are out of work and all this other stuff, but they're also helping the markets. And the housing market is one of the biggest pieces of the puzzle in the whole economy. So what they've been doing is they've been jumping in here and buying in the tune of $5 to $7 billion a day in mortgage-backed securities to keep this stable. And they've been doing a fantastic job with it. So kudos to the Fed. So, we've been trending within these lines, and that's where we should be in normal markets. Well, we're not in normal times. So we're going to see some, hiccups here and there, and that's when you see these big moves. If you really go back further in duration, you see, a collapse at one point when the coronavirus came out. But right now, I'm seeing stability in the markets because I don't really see anything happening until the election time. The Federal Reserve isn't coming in saying really shocking the markets. Employment numbers aren't shocking the markets. Manufacturing numbers aren't doing really anything. The housing market is doing really good, but not, everybody's predicting that. So also what helps in this market is if the stock market is doing bad, that pumps in even more money into this mortgage-backed securities, thus hoping to drive these prices up even higher because of the excess demand, bringing down the yields even further. But right now we don't see a lot of that. A lot of people, there's a euphoria in the stock market that people are just diving in hand over fist. Please be careful. I would start taking some money off the table. I predicted a 10% correction about 30 days ago. It happened. We're back at now at high greed levels, and that means we're probably going to in tune for another slight pullback here shortly. So what happened today in the markets over on this side of the stage? The Dow is down 525. Again, it's starting to get really volatile, and that's where I'm surprised that this number isn't even higher right here, because if you're in the market, start peeling off some of your profits and putting them into something. Mortgage-backed securities is a great investment to put those in. Mortgage applications in the country or throughout the numbers or the surveys that they took said mortgage applications were down 9% because everybody said, if you haven't refinanced yet, you missed the boat. You guys are crazy. We're getting probably 20 applications a day, and if not more, that we are like moving forward with. We probably get 40 a day that we're counter with different rates and give people proposals and educate people through the system. And there's a lot of questions involved when it comes to this. So on this front, everything is okay. The economic calendar today, we saw the FHFA home pricing index. Home prices were up higher than expected. That is great news, as we expected. Federal Chairman Powell spoke. I don't know what he said just yet. I'll analyze that tonight and get back with you tomorrow on that. Tomorrow we have jobless claims and some other numbers coming in. We're expecting the jobless claims to be better than they were last week and continually get better week after week after week. So that's where we see there. So now, I got a surprise for you guys. I will be in 2 articles here. I think they're already posted in MoneyWise. In MoneyWise, Doug Whiteman, he is the editor-in-chief for MoneyWise. And he found me on YouTube and then has been asking me for my input on different areas of the markets. And I was highlighted in 2 of his articles he posted today, and you can see those at MoneyWise. I'll put the links down below so you can see those and read those comments. You can see in here, it says, ultimately it's the personal decision, says Dan Frio, branch manager at Preferred Rate Mortgage in Oak Brook Terrace. It depends on the duration of time it takes the client to recoup their fees. This article is referencing, should you use a no closing cost mortgage for refinancing? So I'm highlighted in that article, and I'm also highlighted in this article right here, and you can see that right here. That's Dan Green. I am Dan Frio down in here, and I'm telling people not to wait to refinance right now. Why? Well, the FHFA, basically Fannie Mae and Freddie Mac, they're coming out with a fee December 1st of 0.5 point for anybody that refinances. Now, there are some loopholes in that we can help get you through to hopefully avoid that fee. But it is a fee that's going to be activated for all lenders in the whole country. 0.5 a point might not sound like much, but on a $250,000 loan, that number comes out to $1,250. So if mortgage rates aren't changing, if you apply now and get locked in prior to this hit, that's $1,200 you're going to save in costs. So not a bad thing to do. Over here, this article says borrowers must hunt hard for low mortgage rates due to new fee coming in. And a lot of people, especially a lot of loan people, don't even know this fee's coming. And they're just going to sit back and they're just working on their current client. They don't look at the future. They don't look down the road. So that being said, let's get on to where rates are today. I got a whole nother, bear with me here because I have another chart coming up. So here's where we are right now, September 23rd, 2020. So the caveat behind all of this is this, or what I mean by this is and what we're looking at is your loan amount on these in this scenario is $250,000, and we're assuming a 740 credit score with a 43% debt ratio, debt to income, and it's a single family home. And I'll explain to you the LTVs here in a second. So let me put it in layman's term. DTI is debt to income. It's your debt load monthly divided by your income. LTV is your loan amount divided by your value. Okay, so if you have a $100,000 loan, a $200,000 value, your LTV or loan to value is 50%. If you have a $200,000 loan on a $200,000 home, 200 divided by 200 is 100% loan to value. So that being said, right now today, September 23rd, my rates haven't changed from where we were the other day when I posted this video on Monday. So if you're buying a home and you meet that criteria, your rate should be 2.875 with a 2.952 APR. If you're looking to refinance, R&T means rate and term. You're not looking to pull out any money. You just want to get a lower rate or a different term. It's 75% loan to value. The rate is 3 with an APR of 3.078. And if you're looking to pull out cash, right now we have the same rate on that and the same APR. So now you go down to the FHA program, and our FHA program and VA programs have the same rate. And if you're looking to purchase a home with an FHA program, you only need 3.5% down, meaning you can finance 96.5%. That's how much you can finance. So to make it simple, if you're looking to buy a $100,000 home at a 96.5 loan to value means you need to put down 3.5%. You need to bring in $3,500. So hopefully that makes sense to you. The rate on that is 2.75 with an APR of 3.18. And we also offer a streamlined program, meaning if you have an FHA loan right now, we can refinance you with no appraisal, no income verification. It's a very simple process and we can get you through fairly quick. We can do that at a 2.75 rate with an APR of 3.18. The same thing with VA, but the nice thing about VA is they'll go 100% financing. If you're looking to buy a home, you need no money down. So that rate is 2.75 with an APR of 3.18. And also the VA, what we call the EARL, that is if you currently have a VA loan and you qualify, you don't need an appraisal. We don't need to verify your income. Very similar to the FHA Streamline. That rate is 2.75 with an APR of 3.18 as well. So those are the rates for today. So what I always ask everybody is this. I hope you like what you see. If you do, I ask you two things. Don't forget to give me a thumbs up. Subscribe down below. We're about 100 people short of 10,000. I really need your help when it comes to that. The next thing is, if you're in the mortgage process right now, I always try to say it like this. If you're getting if you have a medical issue, you always hear, get a second opinion. And that's why I ask people on this. You're talking, $250,000. I have several loans on my desk right now that are $1, $2, $3 million loans. You would think you would check around some things. That's why I have no problem posting my rates, my fees, everything. Just ask. But a lot of people don't look into it. So don't fall into this category where I always hear, well, Dan, what's the out-of-pocket expenses? I don't care what the out-of-pocket expenses are. And here's what I mean by that. Other lenders will say, you know what, the only out-of-pocket expense you have is $100. Well, then why, when you get your disclosures, does it say this loan is costing you $8,000 to get? Well, that's not out-of-pocket. It's still fees. So please don't be hosed by that phrase. I don't care if it's out of pocket, in pocket, finance, whatever. We want to know what the fees are. So here's the best thing to do. If you're in the mortgage process right now, if you're buying, selling, or not selling, you're buying, refinancing, or whatever, and you've applied, the lender has to, and I do too, has to provide you with a loan estimate or a fee worksheet, one of the two. Send that to me. And you'll email it to me, and I'll give you my information here in a second. I'm going to go through it meticulously with a red pen, and I'm going to say, here's what I can do versus them. I might blip you back and say, God bless you. What they're offering you is fantastic. Go ahead and sign it, lock it. Don't look back, close it, and be happy. 99% of the time, I'm beating the other competition in rates, fees, and all the above. And let me preface this. I'm not the kind of mortgage person that goes in and says, I can beat that rate. But then I just jacked up the fees a ton. No, I'm looking at here's their rate, here's their fees. Okay. My goal is to not exceed the fees and get you a lower rate. Okay. Or keep the same rate or get you lower fees. Many times I'm getting you a lower rate and lower fees. It's kind of a no-brainer. So many times you might see me come back saying, okay, I can beat, they're at 3.25, I'm at 2.99. Their costs are $3,000, mine's $8.95. Let's do this. But we got to do it now. You can't wait till tomorrow or next week or whatever. One, that fee's coming up, and two, rates change or have the potential to change every day. So be careful. But if you like what you see, I would jump on it and get moving. So here's the best way on how to reach out to me so I can get back with you and say, okay, here's what I can or can't do. Just go to the rate update. So therateupdate.com, and right down here is the phone number, 844-775-LOAN. That's 844-775-LOAN. Give us a call. If I don't answer, one of my mortgage advisors will. Everything goes past me. I verify and sign off on the rate, the fees, the loan amount, the program, everything. So if I'm not working with you personally, I am working behind the scenes and I know what's going on with your account. But here's what I ask. If you're looking to send me those quotes that you have to get a second opinion, my name is Dan Frio. You can email me at D for Dan, Frio, which is Frio, at preferredrate.com. And I promise you, I'll get back with you. If it's at night, I'll get back with you in the morning. Give me a couple hours to review things. If it's during the day, I'll get back with you by the end of the day because I'm buried with stuff. Thanks to you guys. And I'm blessed because, the business is crazy right now. So that is all I got for today. Sorry for rambling a little bit, but I'm trying to give you guys as much information to make you an educated consumer so you don't get taken advantage of. So again, if you like the video, please don't forget to give me a thumbs up. Subscribe down below. Hit the bell. Every time I post a video, you'll get an alert. If it's something you want to watch, great. If it's something you don't want to watch, don't watch it. But